What were the key findings from this year's survey?
Good morning and great to be with you. As you said, this is the annual sort of survey of our members to see how things are going. And I could sum it up in a few words. Number one, U.S. companies in China, frankly, are exhausted after 3 years of COVID zero. They're concerned. There are a number of challenges, some geopolitical, a lot of them on the ground economic. They are committed, though. I think the majority of companies say they're going to stay in China, but they are challenged. And they highlighted for us a number of those challenges in the report.
Of course, we are headed towards the National People's Congress. There's been a lot of optimism, as I mentioned, that perhaps we could see more support measures coming. At the same time, it's more of a consolidation of power move for President Xi Jinping, right? How open do your members feel that China is right now?
So one of the concerns our companies have raised is last year during the 20th Party Congress, there was a lot of talk about China building its own systems. And so AmCham China companies are asking, what space is there for us to play in China? There's something called sort of national level treatment where domestic companies seem to be at an advantage. And that is a concern for our companies. Again, though, a lot of our companies have been in China for decades. It's still a good market. It's still an important place to be. But, the concern you raise is real. How big of a role are American companies going to be able to play in China going forward?
Michael, has the rapid, some would say perhaps too rapid turnaround when it comes to COVID policy meaningfully changed sentiment amongst your membership?
Yeah, as I mentioned, AmCham China companies, just companies in general in China, have been exhausted by 3 years of COVID zero. On the one hand, we certainly welcome the end of COVID zero. It did feel a little bit like whiplash how quickly things changed. One of the things that we've been trying to say to government officials is it's great that COVID zero is over. A number of challenges remain, even though technically China opened January 8th. A couple of those challenges include there still are not enough flights. It's still difficult to get visas here. And there is this overwhelming U.S.-China sentiment, the difficulty that gives businesses. That comes up in a number of places. Our companies say that's the number one business challenge is U.S.-China sentiment. It also comes into play in HR. But I'll tell you, this is the first time that we can remember that our companies had said more than 50% of them were not making a profit in China last year, and that is a major concern.
Part of it is US-China geopolitical tensions, but the other part is also just a homegrown domestic industrial policy priority shift, right? Is there a sense that increasingly you're seeing more and more sectors which affect more and more of your membership that perhaps they don't feel welcome, or certainly they're going to be affected by some more protectionist or isolationist policies?
Yeah, it's a really interesting scenario. What we hear from our Chinese customers is that they definitely want to buy American products. They want to continue to work with, U.S. service firms, et cetera. But there is some protectionism at home. There are a number of sectors we've never been in. There's a number of sectors that have been good for us that we're sort of being squeezed out of. And so, getting equal access has been a challenge our companies have raised.
We heard today that Apple suppliers were racing to exit China, even Chinese suppliers like AirPods maker Gore-Tex. Are you seeing more of those concerns? I know we've talked about this in the past, especially during the pandemic lockdown, from American businesses.
Yeah, it's a really good point, and it's a good example. In large, 75% of our companies say they're not leaving China, but there's another sort of almost 25% who say they are starting to look at other locations. Sometimes that's because they're being asked to by their suppliers. Sometimes that's because, last year during the lockdown in Shanghai in April and May, the supply chain constraints made it very difficult for companies, and they're starting to de-risk their supply chains. And that means keeping your operations in China, but building additional operations somewhere else. So certainly this de-risking is starting to lead companies to look at other locations.
Michael, there was also skepticism about the revenge spending that we could see in China coming from China Beige Book International, saying that really hasn't been sustained. What are your members seeing?
Yeah, so January and February, by and large, the numbers for retail spending did look really good, but you've hit on the key question. People have said, will this continue? One of the things for years that the China consumer has been really important globally, and we did see over the Chinese New Year in January some consumers going out to travel. So we know they have money, we know where they want to spend. Hopefully it will continue, but you've just asked the sort of the $1 billion question.
you know, the Chinese economy, the Chinese market has broadly been one that's been too big to ignore for a lot of these companies, and that's why there's investment into China and forays into China despite a lot of the risks that come with doing business there. But you take a look at, for example, the instance of the big four accounting firms reportedly being frozen out of being able to do auditing for SOEs. Do you expect to see more and more of that? And is the cost weighed against the reward of doing business in China something that perhaps more businesses are thinking about now?
So a bunch of good points you've got there. Number one, China has a quarter of the world's population. It's very hard to ignore this consumer market, and China has largely been a good market for, AmCham China companies here. And many of them want to stay here and are committed to this market. We are very concerned where we see things like the limitation that doesn't allow U.S. service companies to provide services to their Chinese customers. The funny thing is, if you talk to those Chinese customers, they want to buy U.S. business. They want foreign service providers. And so hopefully what will happen is the market will actually push back a little bit against government regulations and say, they may be a foreign company, but they provide the best service. Please allow us to continue to buy from them. Brand USA is really strong. It's one of, the biggest and strongest tools the U.S. government has in terms of soft power. And so that's why we're really happy to be here, sort of helping U.S. business try to find inroads for markets. China continues to be one of the biggest markets for example, agriculture exports to the U.S. So it is challenging to work in China, but we cannot ignore how important the Chinese consumer is for the global economy and for U.S. business.